Hey, everybody. Welcome back. Today is Thursday, December 12th, 2024. Hope you're doing well. This is the All-Star Options Jam session. I'm your host, Sean McLaughlin, at Options Sean on Twitter. Hope you guys are doing well. We are rounding the corner. We are on the straightaway to the end of the year. Here we are. Hope you had a good year. Hope you had a good bull market run. Uh, you know, Here's the thing about bull markets and good trading environments. No matter how good you did, you wish you made more, right? That'll never change. Sorry. That's the bad news I got for you. That'll never change. All right, so this is the All-Star Options Jam session. What we do here is we kind of discuss a little high-level overview of what I'm seeing in the market, any vibes I'm getting, what I'm noticing. Then we review some action amongst the trades that I have in the All-Star Options service, trades that may have been exited, whether for a win or for a loss, any adjustments we may have made, any things we may maybe need to pay attention to with those trades. We also review updating stops on positions that ideally are working for us, but either way, we want to tighten up risk. And then we'll review some of the newer trades we've put on since we last spoke. But before we get into all that, of course, I have to drop the old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you enjoy or learn something along the way. Hey, Jason, I see you in the chat. Hello, James. Hello, Colin. Hey, everybody. By the way, if you have questions for me in the chat, go ahead and throw them in there. I'll try to answer them if I can. Sometimes I get so focused right here that I don't look over there where the the questions are coming in. But hit me there if you got something to talk about. So here we go. Here's where the S&P 500 is sitting right now, the SPY, just off of highs. We had a couple 2 days where we were looking like wanted to get a little messy, but we've recovered. There's been a lot of talk about declining stocks outnumbering advancing stocks a number of days in a row here. So that's something to pay attention to. But look, that speaks to the feeling that I've got as we head into the end of the year and head into January, that the bull market that we've had, especially the bull market we've had coming out of the resolution of the election, I mean, that's been a bull market where you just buy anything just about and it goes up, right? That's great. Those environments are awesome, but they don't last. And I don't think that the bull market is coming to an end. I'm certainly not calling for a bear market. Maybe there's a correction coming in the offing soon, but I feel like the bull market is going to continue, but it's going to change character, right? We're going to have to be a little bit more selective. We're going to have to use maybe some more creative option strategies to participate in trades and keep us in trades. We'll see. We'll see. But for now, I feel like the S&P 500 and stocks in general, we need to be on alert for I hate the word or the phrase regime change, but we have to be on alert for a change of character. Again, I'm not saying that we're headed for a correction or a bear market. I'm not saying that. It could happen, of course, but that's not where my head at. My head is at the bull market is going to change. All right. How about that? All right. So let's review some portfolio action over the past week. None of it's great news. Some of it's okay news. Let's just start with the bad news first. Let's talk about NSP. This is a position that we were short. We were long some puts. We were betting on continued bearish action. And for a while, we were getting it. We bought the January 75 puts back here in mid-October, and it was going pretty well for us. But the market seemed to find, or NSP seemed to find a bottom here around 71 and change. It rallied back up. It breached my lowered stop loss level at 83.50. It crossed above that and closed above that earlier this week. And so best practices, we closed it near the open of the next trading day, and we closed it for 72 cents. So we paid 2 to get in. Zoom in here a little bit. We paid 2 to get in over here. Got out for 72 cents. Not a total loss, but a loss nonetheless. Let's skip ahead to our other short trade, Hershey. Now this one, holy moly. We were long the February 175 puts we got into at the end of October. It was looking good for us really well. It was doing what we needed to do. We needed portfolio diversification, and it was providing that for us very well. In fact, here on what day was that? That was November 15th. I mean, it looked like, whoo, we were off to the races here. But again, the market had other ideas. It found a bottom. And then this big spike we had a few days ago, there's some buyout talk. Someone's interested in sniffing around and buying this company. Obviously, whenever there's buyout talk, there's concerns about whether or not the deal will go through, and that's certainly being reflected here. So on the big spike, we didn't get out on the big spike day. We got out the following day. Um, just to let the thing cool off a little bit. The bid-ask spreads were pretty wide. I mean, we had a defined risk bet on, so there was never any panic. But we waited till the next day, and that, follows our best practice, right? We always want to see a close above our stop loss level. And we got that on Monday. And then on Tuesday, we exited the trade. But hey, thanks to all the uncertainty in this stock, that actually played in our favor here because when we paid $550 for these puts back on January or February 175. And the reason we were able to buy them is because in that time, implied volatility was pretty low. We don't usually get an opportunity to buy long puts when volatility is low. It doesn't happen very often because usually we're buying puts because we're bearish and everybody sees why we're bearish, and people get scared when stocks are going down, so they bid up the premium of options, particularly puts. But in this case, we were able to get puts at a in volatility terms a very attractive price. Well, guess what? When this new uncertainty came in, now this new buyout talk that's going on, that actually put a lot of premium into options, both calls and puts, because now there's uncertainty and now there's speculators really getting involved here. So that actually helped us. So we paid $550 to get him. The stock clearly is going against us, but we still were able to get out of those puts for $4.25. So we really only lost $1.25 on this trade. I mean, it's not a win, but boy, I'll chalk it up as one, right? A psychological win. I feel like, wow, if you would have told me back on October 28th when I got into this trade that Hershey would be trading at $1 or at 192 a month later, if you would have told me I would have got anything more than $1 for those puts, I would have said you're crazy. But hey, here we are. So that's some good news on some otherwise bad news. We're still losing trade and we're out. Speaking of losing trades, the last one is IOTA. Actually, it's not a losing trade. Here's an interesting situation. We bought the January 60 calls back in September. We paid $1.85 for them. As was the plan that we laid out when we put the trade on day one, was that if we ever got an opportunity to sell the January 70 calls against those 60 calls to create a vertical spread or a bull call spread, if we could sell those for $1.85, I would do so. Basically, netting that 185 credit against the 185 debit that I paid on day one means I have zero cost. And guess what? How about that? The day where we printed at the high is the day that my resting good till cancel order got filled for $1.85. I didn't do anything. I wasn't even paying attention. I was away from my desk, but I had that good till cancel resting order to sell the 70 calls for $1.85, and it got hit on that day. And boy, am I glad that happened because it's done nothing but go straight down since. We had an earnings gap through a few days ago, and now the spread is underwater. In fact, the spread is basically worth zero right now. But no loss to us because we had the spread for free. So, now it's a lottery ticket. We have until January. We'll see what happens. But I mean, 48 was my stop. But when the stop triggered and I looked at the options, there was no bid in the calls. So it's really it's a nothing. Maybe we'll get lucky here. Who knows? All right. And finally, Oracle. We bought the June 200 calls back in October, mid-October, paid 1075 for them. As was our plan, again, going into Oracle's earnings announcement, is that I said on this day, which was October 9th, that heading into the earnings event, Oracle announced earnings after the close. I said near the close of trading on that day, before the earnings announcement, I was going to sell half of my position to take risk off the table. And part of that reason was I was betting that heading into earnings, we would get a little jump in volatility, which would add a little premium to the calls, which it did. We were also bullish on the stock. We thought we can get some of the direction right and the volatility jump. So we did. I sold half, about 5 minutes before the close. I got $17.50 for it. And boy, am I glad I did, because as you can see, the earnings reaction to Oracle was not good. Oracle eventually stopped or closed below our stop loss level. and I sold the other half for 865. Now we paid 1075 to get in, sold half at 1750, the other half at 865. It nets out to about what about a net sell of about $12.25 if you average these two sales together. That's a win. Even though the trade, the stock went nowhere. I mean, look, we're basically right where we were when we entered a month ago, 2 months ago, but we made money. Why? Because we stuck to the plan. That's why. Sometimes it doesn't feel good to stick to the plan, but more often than not, it does do what you intended it to do. And here was a great example in Oracle. So that's all I got for trades that we've had action in since we last spoke. Let's go to updated stops and let's get you updated on CM. This is a trade we've been in since August. This trade's been a home run for us. We bought the December 55 calls for $1.05 back in August. As you can see, the stock has gone our way, heading into an earnings event that was poorly timed for our exit. We decided to roll the calls up from December 55 to December 65 to take some profits and protect ourselves against any potential downside while still leaving us exposed to further upside if we get it. And I feel like that was the right call because coming out of earnings, the reaction has been positive. We are continuing to go in our direction, which is great. We're now long the 65 calls, but we're trailing a tight stop on this now because these calls expire next Friday. All right. So we don't want to give this too much room to come back on us. So for now, my stop loss is at 65.75, which corresponds just below the low of this week. As the days go forward, I'm going to continue updating the stop. I'm going to trail it somewhere below the 3 to 5 day most recent low. Okay. Don't want to give too much back because if we start giving back, these calls basically have all premium left, and that premium is going to evaporate really quickly as we head into expiration next Friday. So for now, our stop in our CM position is 65.75. Any close below that, I'm out. All right. Next up, Microsoft. We're moving our stop up to 420. Our stop used to be below these lows here. Moving it up to 420. The stock is really going in our way, looking really good. Additionally, guys, this was not part of the plan when I first put the trade on, but I'm telling you now, the most this spread could be worth is $50. We're long the January 420 calls and we're short the 470 calls. Okay, so the most that spread could be worth is $50. That's the difference between the strikes. All right, these options expire in January, so we got a little bit more than a month left until expiration. Well, I'm applying the 80-20 rule on this spread now. The spread is working for us. We're making money, but the most it could be worth is $50. I've got a good till cancel limit order to sell this spread for $40. Why 40? 40 is 80% of the full value of the spread. Once we get there, I don't want to be greedy. I'll be happy to get out for $40. Now, if for some reason Microsoft gets to 470, which is our short strike, before I get hit at my limit order, I'll just exit the position anyway. So I'm exiting at one of two places. Either my limit order gets hit to sell the spread for $40, or if the stock trades up above 470, I'll sell it then, take whatever I can get. It'll be a profit, just not exactly sure how much. But either way, it'll be a good trade. It's going our way. I like what we're seeing here in Microsoft. Finally, the only other updated stop we're updating today is in Hilton, HLT. Trade we got into a couple weeks ago. We're along the June 290 calls we paid $6 for. We bought this dip. So far, it's looking good. We had another weird dip a couple days ago, but we've recovered it. We're on the verge of making new highs again. But I'm moving my stop now to 243, which is kind of below this consolidation from this earnings gap on November 5th. Any close below 243 gets me out of Hilton. All right, that's it for the updated stops. Not a whole lot of updated stops. Lastly, we'll review our new positions, new trades we've put on since we last spoke. For those of you who are unfamiliar, all the trade details for every one of these trades can be found at allstarcharts.com. If you head to the members section and then head to the options section, you will find all the detailed trade plans for every trade. These detailed trade plans tell you what we like about the stock, what we like about the setup, how and what option strategy we're going to use to take advantage of our thesis, where we're managing risk, where we may or may not be taking profits. All of those details are laid out I think, very easy to read, very friendly, it's not complicated. So put all that out there for you. So you have that from day one, so you can manage that trade going forward. So I don't have the details for each trade here on the site or on these charts. If you want access to them again, go to allstarcharts.com and get involved. If you're not involved, sign up for All Star Options. What are you doing? Join the chat room, hang out with us. We got a great group. But anyway, quickly, the trades we've put on since last week. First is Procore, ticker PCOR. We got in a few days ago. It's a bullish trade. It's not doing what we wanted to do yet, but you know, it's okay. It's okay. They rarely work right away. But we're bullish on PCOR. Next up is Royal Bank of Canada. Canada's been good to us, particularly Canadian banks. We talked about CM earlier. That's a Canadian bank. Royal Bank of Canada. We got long here. Think of it as like a rotation play, right? The CM worked great for us. Now we're rotating out of CM and getting into Royal Bank. So we're long Royal Bank. And then finally, Hood. Robinhood got into this yesterday. I'm liking the way we're trading today. One day doesn't make a trend, but certainly like to see that the day after we got in. We were buying this dip. I liked buying on this red candle here or following this red candle. We are long Robinhood. Again, all the details for these trades can be found at allstarcharts.com. All right, let me just throw, oops, hold on. Oh, sorry, Gene, my view there changed for some reason. There we go. Now, here's the updated stops for people who love the slideshow. There it is. There's the 3 stops. Go ahead and screenshot that if you need to. And then lastly, as always, if you have questions, you can shoot me an email at info@allstarcharts.com. That'll get routed to me. Happy to help. If you're not involved in stock in All Star Options, that's the link to get involved. And if you like the charts I'm sharing, my good friends at TrendSpider are allowing you to use my promo code Sean50 to get 50% off a subscription plan at TrendSpider. I love the charts. I think you will too. It's easy to use. I like the way they look, and they're good people. What else? What else can you ask for? All right, everybody. That's all I got for you. Have a great weekend. I know it's only Thursday, but for those of you who start your weekends on Friday, good for you. Enjoy your long weekend. I'll be back next week. Until then, trade them well. See ya.